Bitcoin mining is not going anywhere, but the landscape won't be the same next year.
My name is Wang. I'm the Vice President of Capital Markets and Corporate Development of Canaan Inc. with a ticker CAN listed on NASDAQ. Joining me today is Mike from Pow.re, founder and CEO. Tell us a little bit about your company.
We're a Bitcoin mining company. We have been for 6 years. I've been in the industry for a little over 10 since 2013, mostly self-mining. As a result of our own natural needs, we've come up with some miner financing solutions where we match lenders with miners to help them grow.
As long as our company's history, you've been through so many bears and bulls markets. Tell me a little bit about your experience in the past.
Been through a lot of cycles. This one feels a little different. I guess the sentiment is that most of the bear markets were preceded by kind of a bull run, or it was boom and then bust. There wasn't a very big boom before this one. So for the past year and a half or two, revenues weren't very strong. Hash price was kind of slowly decreasing. Difficulty kept going up, and then basically went from not so great to much worse. And here we are. But luckily, we're still alive. We haven't grown massively. We've always been sort of careful with our growth. We're a private company, and this is a trend that I think will reverse itself. A lot of the HPC expansion was forcing pretty significant amount of Bitcoin mining hash rate offline, and I don't think it will come back once it goes HPC. That's it.
So your business has two pieces, mining and mining financing, right?
Yeah, mining is something that we've done for years. It's how we started. The other side of it is basically like the miner financing and hash rate contracts where we trade hash rate. As a miner, you're going to be producing Bitcoin into the future, and the way that the contracts work typically is we'll prepay some amounts, and often in Bitcoin, at a discount to market. Basically, we take delivery of the hash rate over time and make a small margin on it.
So the investors of your hash rate is actually prepaying you with a discount of the estimated Bitcoin they would receive over a period of time.
Yeah.
So why would people do that? What's the incentive?
Why they would purchase the physical hash rate, there's a few reasons. That they are looking to capture a premium, but also because there's arbitrage opportunities with hash rate, like depending on where the hash rate actually gets delivered, which mining pool, which network even. There's potentially later this year a fork. And so if those forks happen, then there's going to be a demand for hash rate somewhere else, or to redirect it. There's a need for it to be resold. And there's people that intend to signal for a BIP that the actual hash rate capacity. And this is one way for them to make that intention known.
I'm so glad you brought up the fork, right?
Yeah.
Because you're an OG and you must have seen
Bitcoin
forking before.
Yeah.
It's not the first time. So what's your view on this one?
I don't think it's necessarily bad. I'm speaking about eCash in particular. It'll enable for some innovation. Now, I think the problem is price discovery, which was the same problem with BCH. Right when BCH forked off, it was very difficult to establish, well, what exactly is this new thing worth? Is it $1? Is it at parity with BTC? Is it in the middle, or anywhere in between? Those first few weeks and months will be hard to price. And I guess that's also where the opportunity lies.
Back then, Ethereum decided to go from POW to POS. And a lot of people were talking about it. They thought they lost the support from a very big mining community, which was bad for them. What do you think about that?
I mean, I think it was also bad for the decentralization of the network, right? Because you already, in Ethereum's case, you've already had concentration of wealth of who held a lot of the ether, which a similar situation happens with Bitcoin as well. There's also that concentration of wealth, but the difference is the new production isn't necessarily in the same hands of the people who already hold the asset for proof of work. But that is the case with proof of stake. Now, to be frank, I haven't kept up with a lot of the development in Ethereum because I was a miner. I was actually an Ethereum miner at the time too. I started out with GPUs in 2015, like the first few blocks of Ethereum, we were online.
That makes a total sense. I mean, Bitcoin is known for its decentralization as the anchor of its value, right?
It's not perfect either. Bitcoin's decentralization has a lot of problems, but I still think that it's better than, let's say, Ethereum's.
Yeah, the holdings are getting more centralized, the mining pool even.
Mining pool centralization in particular, I think, is the biggest risk.
That is the biggest risk in your opinion.
Yeah, I mean, because miners at the end of the day don't actually control block templates and transaction ordering. That is sort of a point of control that there aren't very many pools to begin with. And there are some pools that are very large and could exert influence if they really wanted to. I mean, I don't think they do, but the risk is there.
Mining pools is a very, very difficult business, right? So smaller pools, it's very hard to survive.
It's a race to the bottom on fees for most of them, right?
Yeah.
And it also requires a pretty heavy bankroll to be able to offer, for example, FPPS rewards. We're not necessarily in that business, but we're now with hash rate brokerage kind of competing with the demand for hash rate from pools.
About the hash rate financing business, do you see any challenges or do you see that complementary to your mining?
The main challenges now are sort of the economics of Bitcoin mining in general, because obviously we won't underwrite bad debt. We don't want to pair a lender with a miner who's not going to be able to service that loan and survive long enough to repay. When you kind of look at most mining businesses, it's really only the best in class ones, cheap power costs, highest efficiency, etc., where debt is justifiable. Whereas, if the margins were healthier, more mining businesses would qualify. That's kind of the challenge, is that like we do have some demand, but we can't just take every client just because they want it.
It's almost like a chicken egg thing.
Yeah. So it's it slows down growth, but at the same time, we don't necessarily want to.
Well, the leverage is much lower than a couple of years ago when.
Oh yeah.
Yeah.
Well, I mean, like the other problem is that the last time there was a lot of debt towards miners was sort of the peak of a bull run. Machines were selling for the highest price they ever had. A lot of that didn't end well. Some miners are sort of wary of debt. The main difference is because we denominate these contracts in Bitcoin, it's kind of the right way risk where the Bitcoin is given to the miner up front. They're producing Bitcoin in the future, and we kind of evaluate what their borrowing capacity is based on the company's fundamentals.
Do you have anything to say to the audience?
We're here to all the miners that are interested in purchasing Canaan products.
Oh, thank you.
If they want help with growth or financing of those purchases, Bitcoin mining is not going anywhere, but it's definitely going to, the landscape won't be the same next year. It wasn't the same last year. I'm excited to see what the future holds.
Onward and upward.
Yeah, exactly. Onward and upward. And hopefully all of the growth that we saw in the past few years will kind of roll back, which will make for a healthier ecosystem overall.
Well said, sir. Thank you for coming by.
Thank you.